This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices dipped on Friday, a day after topping $85 a barrel for the first time since November, but prices were expected to finish more than 3% higher for the week on rising demand from U.S. refiners completing planned overhauls. Brent crude oil futures slid 9 cents or 0.11% to $85.33 a barrel at 12:16 p.m. Central Daylight Saving Time, 17:16 GMT. U.S. West Texas Intermediate crude was down 17 cents or 0.21% to $81.09. Supplies are tightening for motor fuels, said Phil Flynn, analyst at Price Futures Group. Prices are at risk to go higher, but there are worries the U.S. Federal Reserve won't be able to cut interest rates because inflation remains above the central bank's target of 2%, Flynn added.
Russian oil refining capacity shut down in the wake of drone attacks in the first quarter amounts to about 4.6 million metric tons, 370,500 barrels per day, or some 7% of the total, Reuters calculations show. Ukraine has stepped up attacks on Russian oil infrastructure since the start of the year, hitting numerous large oil refineries in an attempt to cripple Russia's military and curb its army's advances. The attacks and consequent reduction in refining capacity have pushed up global oil prices. Russia has said the country's crude oil exports are likely to increase due to unplanned maintenance at refineries.
Moving on to the top news in the energy sector.
Top oil executives and ministers descend on Houston this week for one of the world's biggest energy conferences, emboldened by blockbuster mergers, stable oil prices and less pressure for a large-scale move to clean fuels. Global oil prices have remained in a range between $75 and $85 per barrel, a level fueling profits but not hurting economic growth, despite war in Eastern Europe and turmoil in the Middle East. Stock markets continue to spur deals, making big oil even bigger. The annual CERAWeek conference comes as demand for oil and gas continues to rise alongside solar, wind and biofuels. Energy markets have accommodated a reordering of global flows as customers turn more to regional energy suppliers or live with longer seaborne supply chains.
U.S. energy firms this week added the biggest number of oil and natural gas rigs in a week since September, with the oil rig count also rising to its highest in 6 months, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, rose by 7 to 629 in the week to March 15. Despite this week's rig increase, Baker Hughes said the total count was still down 125 rigs or 16.6% below this time last year. Next, we have the top news in metal markets. Fund buying propelled copper prices to new highs on Friday, but some investors and analysts were cautious about possible output cuts in China and whether the rally would be sustained. Shanghai copper prices hit a record high and prices in London and Chicago touched an 11-month peak after Chinese smelters agreed to trim production in the face of weak profits and losses. 3-month copper on the London Metal Exchange had advanced 1.9% to $9,057 per metric ton by 17:32 GMT, the highest since April 2023. U.S. COMEX copper futures gained 1.8% to $4.12 LLB.
Gold prices held steady on Friday as they looked set to log their first weekly drop in 4 as investors lowered expectations of a U.S. interest rate cut after data over the week showed bubbling price pressures. Spot gold was little changed at $2,159.99 per ounce, as of 2:42 p.m. Eastern Daylight Saving Time, 18:42 GMT. Bullion lost 0.8% for the week, in its first weekly decline since mid-February after hitting a record high of $2,194.99 last week. U.S. gold futures settled 0.3% lower at $2,161.50. Data this week showed U.S. consumer prices increased above expectations in February and producer prices also showed some stickiness in inflation.
We will now look at the top news in the agricultural sector.
The state of French soft wheat crops declined slightly last week to remain at their worst in 4 years. Data from Farm Office France Agri showed on Friday, as fields remained soggy after a wet winter in the European Union's biggest grain producer. Some 66% of French soft wheat was rated as being in good or excellent condition by March 11, down from 68% a week earlier, France Agri said in a serial report. That was the lowest rating for the period since 2020, when 63% of soft wheat was rated good, excellent in another season marked by wet weather.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.